Hello, today we're going to talk about the US dollar, and what we're seeing in the US dollar is especially depicted in the US dollar index development. And we're seeing that this weakness that we have right now comes at a point where the Fed has stopped hiking interest rates for the time being, and other central banks are still hiking interest rates for the time being. So the yield differential between the US and the world, this is the major issue for the US dollar, because for me as an investor, if I invest in a currency, I want to be paid for the risks that I'm taking. And as long as this yield differential was substantial and growing, the US dollar was supported. But this yield differential is expected to decline. That's why we're seeing this current weakness in the US dollar. And if we look at the US dollar index, the US dollar index is used to measure the value of the dollar against a basket of six currencies. And these six currencies are consisting of the euro, Swiss franc, Japanese yen, Canadian dollar, British pound, and Swedish krona. The index is, of course, trading down due to the fact that there's no expectation of this yield differential between the US and these six countries within the basket where the US dollar is measured against. This is not supporting the US dollar for the time being, and we're seeing that the US dollar is currently under pressure. And we have to wait whether the announcements by the Fed will really support this trend continuing going forward. But for the time being, fact is that the yield differential is anticipated to smelt, and that's why the US dollar is currently being traded lower and is noted for a weaker period of time. But still, we have to wait and see whether the Fed will still continue this policy of not hiking interest rates any further, even though most market participants anticipate further rate hikes until the end of the year. If you would like to receive further updates about what's going on in the market space, please like and subscribe. Thank you.